Good morning and welcome to episode 109 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International, and today is Wednesday, February 8th, 2023. Last week, we spoke to you right before the conclusion of the January meeting of the Federal Open Market Committee, where the Federal Reserve and Chairman Jerome Powell decided to raise interest rates, but at a slower pace, 25 basis points or 1/4%, much as predicted. But of course, everybody was paying attention to the tone of the remarks, and basically, Powell said that the disinflation process has started, but we have a long way to go, and we are going to have to maintain a tightening posture for some time. So basically, he kept up that hawkish tone. And that, coupled with the fact that nothing really has appeared to be broken, they were worried about breaking the jobs market, but the numbers on Friday surprised upside. We were looking for about 180 some odd thousand new jobs. We got 580 some odd thousand new jobs, if you believe the numbers. And that coupled with slower pace of inflation. Now, folks, it's still 5% more expensive to live than it was a year ago here in America, but the pace is slowing. It was up around 7, 8, 9%. So with that continuing to ease, nothing broken in the jobs market, the markets all got spooked and started to sell off. In fact, the selling off happened even before Chairman Powell spoke last Wednesday. And the numbers I gave you last week were pretty much the highs before the pullback in the precious metals. So let's take a look at those numbers right now. Gold today is at $1,881.70, down 2.5% from last week's high of $1929.60 an ounce. Silver down 4.33% to $22.53 from $23.55 last week. Platinum down 2%, $996 today is their price, whereas last week it was $1,016 an ounce. And the only winner in the metals complex this week is palladium, up $3 or 1/5% to $17.52 an ounce from $17.49. With silver falling faster than gold, the gold-silver ratio, or the number of ounces of silver it takes to buy an ounce of gold, increased to 83.85 ounces of silver versus 82.24 last week. And the dollar is back up to 103.12 from 101.86. Now, all the markets slumped. We saw the equities markets pull back as well. Everybody's worried that the Fed now is emboldened to go ahead and raise rates further, faster, for longer. So everybody got spooked and everything sold off. Now, again, some of that was profit taking, but I do think this US dollar surge is something to pay attention to. I want you to keep your eye on the US dollar going forward, because that was moving even before Jerome Powell started to speak on Wednesday. Now, you got to put it into perspective. The US dollar was peaking last year, end of September, at about 114 on the index. Very strong, very bullish. And from that point, over a 4-month period to the end of January, the day before I spoke to you last week, it had fallen down to below 102, 101.85, 101.70 something. That is a massive move. That's a 12% drop in about 4 months. And it turned around almost immediately. When I saw gold down about 1% or 2, I right away looked to the dollar, and guess what? It was up 1% or 2. I do believe there was some intervention on behalf of the US dollar, trying to give it some support, because it has been in free fall for about 4 months. Now, that's not conspiracy theory notions or anything. All I'm saying is central banks do support their currencies, and I think that's what's going on here with the dollar. Profit taking and interventions tend to have short-lived impacts. I think the result of this is you have a buying opportunity that you should not have with gold and silver, and I strongly suggest you take advantage of it. As always, I want you to go ahead and follow us and like us on YouTube, send us your comments and questions, subscribe to our social media, and our twice weekly alerts, always something interesting. And tomorrow we come out with our monthly newsletter information line, jam-packed with wonderful information. But the most important thing you need to remember is that getting rich starts with keeping what's yours.